Welcome to Drill Down Earnings. We have quarterly results out from Intel Corporation. A really interesting quarter from this, one of the 50 most important companies in technology. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. Been covering Intel for a very long time. And this is a really interesting quarter, even though it's kind of a punt. It was a little bit better than Wall Street expectations for second quarter numbers, but let's look what the business actually did, the actual numbers. So revenues in the quarter, $12.9 billion. I say it was a punt. It was literally just a few million bucks over the same quarter last year. We're going to call it flat, 0% change on a year-over-year basis. And they lost money. They lost a ton of money. There were a lot of charges in this quarter as they go through their second quarter with a new CEO and some big changes in the business model. We're going to see that here. They're taking some really big actions to cut capex. They've laid off a ton of people. And they've suggested that the layoffs are probably over, that they've got a direction now, but they're going to slow down the building of projects. And indeed, a lot of the tools that they've purchased, they say they're not going to need anymore. And so they took write-offs for those expensive tools used to make semiconductors, or apparently not being used to make semiconductors. The result was an operating loss. Their operating profits took a really big hit, down 25% over the previous year. So and that was a loss as well. So not really good news here. Now, when we think about the top line of the business, what do they make outside of financial messes of things? It's what they've been doing the last few years. Client computing, chips that go into data centers, chips that go into PCs and computers, whether the laptops or notebooks, of course, a huge business for them, although they no longer break out on a quarterly basis those sales. That's also interesting. They've reduced some of the disclosures that they give, or at least the fine details that they used to give about what their things are being sold into. Their Foundry business is 33% of revenues. And while their other businesses and investments are 8%, and they're trying to get rid of some of this stuff, well, let's talk about these things. All right, so first of all, their Intel 18A is, that's the future technology here. And the questions are, how much do they have to spend to get into that business, to be on the cutting edge of making semiconductors again? And how much is foolish spend because they don't have the customers yet? And that's kind of the big debate that they talked about a lot in the conference call. But they're entering production in Arizona, their 18A product, which is a real key milestone for these guys. Their Panther Lake client processor ramp. They say they're going to sell the first product out in Q4. And that's really huge for this business going forward. And they've also announced some new Xeon processors, or Xeon 6 processors, one called the 6776P, if you're keeping score there. They say it's on track with some of the similar chips from NVIDIA that are focused again on data centers here. And so as they grow out in this business, they're also focused, of course, on this Foundry business. They're on some level, they want to compete with a Taiwan Semiconductor. They want to have a Foundry business that lots of other companies can use as well as themselves. But they have spent tens of billions of dollars in that without getting the clients yet. So they're going to reset that business. They're canceling the planned fabs they're going to build in Germany and in Poland. They're getting rid of their Costa Rica packaging operations and move those to Asia. And their huge facility they've been building outside of Columbus, Ohio, which I've seen, they're going to slow that construction, they say, until they get the customers in hand to align the build out with the actual demand before they invest a lot more. So we're going to keep an eye on that. And again, into this quarter, the restructuring charges, that what really hurt them, $1.9 billion in restructuring charges. They brought headcount down 15%. They've gotten rid of a lot of management layers. This is a great anecdote in an email that was published when the new CEO came in, where he said people are actually being rewarded for the size of their teams, that their KPIs included how big is the team that you manage. And if your team is bigger, you get more rewards, which is crazy. And they got rid of that. As a result, management layer is down 50%. Now, client computing, their biggest business, again, still in decline. And their Foundry business, up 4% on a year-over-year basis, but still not there yet, not what they want that business to be. So the market didn't really know what to make of these numbers, I think. The stock was down about 1%. And it was down because the market's looking at these commentaries saying, is this a restructuring or is this a company that makes stuff? And it's a little bit of both. And indeed, for the last year, the stock is down 29%. Now, I talked about the changes in capex with the new CEO. They have drastically cut capex. They were spending, upwards of $10, $11 billion a quarter. They brought that number way down 9%, even after the numbers from last quarter, which were way down. And of course, the guidance we got is that number is going to continue to come down by canceling all those other plants. So lots going on here. Let's talk here. Listen to what Lip Bhutan, the new CEO, has been there about 6 months now. Here's what he had to say.
I think we're going to learn a lot, and we're not going to put any capex until we see the yield performance, and also our internal customer and external customer feedback and the volume commitment, then we will put the capex in. And so the perception will be very clear. We are committed to the Foundry business. And then meanwhile, we're going to be very disciplined in our capex deployment, make sure that we see the volume, see the customer commitment, then we deploy.
All right, what's it all mean, and what's your big drill down earnings takeaway? What's the one number that tells us a whole lot? So Q2 earnings from Intel, an important quarter for this company. That's kind of a punt. Again, your essential summary tells you got $12.9 billion in revenues, which is flat on a year-over-year basis, kind of amazingly flat, given that client computing was declining. Foundry is not the business they want it to be, about a third of revenues, but barely single-digit increase there. I think the real story here is in that drill down earnings bite, the one number that tells you a whole lot, and that number, $3.550 billion. That's what they spent in the quarter for capital expenditures. It's the lowest number they have spent in many years in capex, and them telling us that number is going to go down even more in the future. All right, thanks for checking out Drill Down Earnings. Follow me at Cory TV, and of course, all of Epistrophy Capital's research, or at least our video summaries of that research, you can find on YouTube and on TikTok and on Instagram at Drill Down Pod.